Good morning and welcome to today's webinar, which goes by the name Real-Time Daily Trading Ideas. Today's February the 22nd and I'm moderating our international webinar from our office in Berlin. My name is Alex Raftopoulos and I'm happy to be talking to you. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. Statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Dirk's turn. And before I finish off with the introduction, I would like to kindly invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Please feel free to have a look around our website and explore our international activities, and do not hesitate to contact us should you have any questions. Well, enough of me for the moment, now it's Dirk's turn. Good morning, Dirk. How are you doing? What's your outlook of the markets for the moment? Just give me a second. Ta-da.
Yes, good morning, Alex. Good morning, guys. Just let's transmit the screen. So hopefully everything is working fine. I had some technical issues, not hearing you 100% correct. Maybe that's just a Wi-Fi stuff, Wi-Fi problem, whatever. Hopefully my sound is clear, and let's start into the first, let's say DAX analysis of the day here. And if you check out the current DAX high here at the board, it's 11,466.64 here. We're gonna have a look at the current information which we already got this morning. So first of all, as you all know, I always prepare these kind of boards for you guys, and talking about the Xedra DAX, for example, we see those resistances and supports, as you can read it by yourself right now here on the board. Especially interesting if you scratch that resistance 2 level this morning, slightly around this resistance 2 level. It would be very interesting to get a short position up there. If that one, which is already set here around this level, is not working well. The resistance 11,486 is almost at the same level like yesterday's candle top, which you can see right here. If you just mark with your arrow and you mark it where the red one is 11,483.75, as you can read it right here. Okay, back to the board. Especially interesting if it is interesting to get a little bit of a setback back down to the exponential moving average, which is hovering around the 100, is hovering around 11,324. So maybe it's getting quite close to that one. If you look at supports, 11,395 and of course 11,361. I need to check that out if I just forgot to implement that one for you. And just hold on 1 second if that one is correct, because that seems to be not correct. Just 1 second. The so-called pivot point right here at this level seems not to be very correct. It's as I said, it's down there. It's 11,365. That one is the correct one. 11,335, and the support 2 here is at the level of 11,267. Just to check out if that one is correct, not to confuse you guys too much. Pivot points as well can be implemented. can be implemented by your Admiral pivot software, by your Admiral MetaTrader software if you use the pivot point indicator. You guys not get too confused. 1 second, I got confused myself because I took yesterday's support and resistance here at the support line. My gosh, 361. So that one was correct before. Confused myself. Happens sometimes. Okay. Nevertheless, a short setup which is put in right here is at 11 for 50s, and the stop loss is at 11.506. So this is the first try of a setback, so-called DAX short this morning. And if you look at fundamentals, it's quite interesting to see a squeeze to the upside. Still working on that one, the German DAX. But on the fundamental side, you got the EFO this morning at 10 o'clock, which came in quite bad. So that's this. This is 6th time in a row that data is missing, and data is missed the estimates. And the EFO index this morning, February, came in with 98.5 points. So stuff like the auto tariffs, which Trump is going to bring up with the next discussions in next weeks, or possibly be a month to come. Very dangerous for the German DAX and very dangerous for the German economy as well, because auto sector is right at 7-8% of GDP. You can think about all the kind of companies delivering into the auto industry, very important for the German DAX and of course for the German industry. That means if that comes around, if there is something like a danger around the corner, that might be 1 point of a trigger for a new sell-off in the DAX, which is going to be in directions with 10, 800s and so forth. That would be a longer term target. Short-term target for this one, the straight here, is the down barrier. I will just implement Fibonacci's right here, just to show you where the possible targets to the downside are, going from this last low up to this yesterday's high. Of course, widening the picture a bit, just to show you guys this one quite clear. Oops. When you press the same line, you just simply press the command to change the trade. Okay, so that first target you see is the 23.6, and the second one would be the 38.2, which is something like a short-term, more than short-term targets for the next, let's say, week. Why am I talking about short setups? Well, you got to be looking at the bigger picture besides the German DAX. Of course, the German DAX is just one leading index in Europe, of course. But as you always know, US markets are the leading indices of the world, and the US market is still the leading market of the world. So if you see something like the SP 500 as a broader market, or something like the Dow Jones, you will see that this kind of a run-up, this run-up from the last, let's say, mega dip, is quite limited already. And if you look at the weekly chart, if you do that at the cash index SP 500 from the Chicago market, from the Chicago exchange, so then you will see 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. That one here is red. That's not correct for the S&P 500, which is traded in the US. So that means 8 weeks in a row, and it's still working on the 9th candle, weekly green candle, and it's really getting very close to a relevant chart technical situation. We will see what is going on with those Fibonacci's here as well from the record high. Let's just check out if that is the correct one, to 940.85 to 940. So that's the one. And we are getting closer to another Fibonacci, which is not implemented here in the chart, which is very close in direction where we are around here. So we will have to implement that one just manually as a line, horizontal line, at very close to the 2,800 level. That's a 76.4 fib, and sometimes you're able to implement that one in your Fibonacci system as well. I'm not sure if that works right here. Just check out if we might implement that one here as well. That might be working. You can do that if you just move press the button add, and you see that one here at 0.76.4, and it should be getting entered right now. Let's see if that works. As you can see, that one is running in here into the system. So that is very close to that current market status where we are hovering around. And on top of that, besides that kind of a 76.4 fib, you see highs from 2817.51 to 794, and more relevant, this one 2,813. So that let's say that room, that so-called trading box you can draw might be at the 2,810 level, around that. So possibly a nice trading box to draw for a short setup, and to have a so-called setback into direction of that. Where's the arrow down to that 61.8 level here. Of course, just to be correct, it should be a red arrow. Okay. Talking about those so-called trade deals, or let's say that trade negotiations were just still running. Mr. Trump already said that the 1st March is nothing like a magical date. So that means that that could be forwarded if negotiations keep on running well. And right now, it seems to be that way. That is the case. If you just listen, if you read market reports and stuff like that, you will read a lot about the situation of the current negotiations between China and the US. Not only the currency situation, so they don't want to have a weak Chinese yuan. They already said, well, that's in interest of China as well. Of course, we have to pay back US dollar debt, so that makes it more easier for them. So that's 100% yes from China, which they already said. On top of that, that they will buy a lot of commodities from the US, which makes it one step more in the so-called memorandum of understandings they are going to be signing one day after another. Nevertheless, it's typical in the market, and you can see that we already bought into that kind of a rumors of a trade deal, and that the so-called buying the rumor and sell the fact might be really running into our direction right now, of this kind of a strategy, waiting or scratching this level around here and trying to be on the short side for the next few days. Okay. Another one, we've been speaking about these Chinese yuan and so-called US dollar against the Chinese yuan. That's the offshore renminbi one. I spoke about a US dollar versus the Chinese yuan short. We spoke about that last Friday, as you know, and as you can see, that one moved down already. So we spoke about targets running in direction to that 660s and 650s. We used a couple of Fibonacci retracements for this kind of analysis as well. No need to implement that again. You can see that one in the recorded webinar from last Friday, of course. Talking about the US dollar versus Canadian, we spoke about a US dollar Canadian short. That so-called loony short went quite well. It depends what time you simply exited. We put a short in at 132.97, and as you can see, This goal we already talked about. We spoke about the 61.8 level here, which is at 130-170s, got definitely scratched. So our target is done. However, of course, it's up to you to take that one out. Otherwise, you might be running into a loss one day. Right now, it's still not the way, but it's still not the case, but it could be. So this deal is done. This trade is done. Another one was Euro GBP. We spoke about a short setup, which is definitely running quite well. We spoke about the goal, the 61.8 level here as well, which is a very long-term Fibonacci, the 61.8 from the long-term, from the all-time high, very close to parity those days. And this is a level which is still being fought in these kind of hours, as you can see, that 087 10 to 30 zone is still in progress. This is something like you might be interested in, let's say, fighting around. So there could be a little bit of a bumpy road the next hours to come. So 87.30s might be a next step in for a new short setup, which might be having a target like we see the last time we got a low at 086 or 86.17, which might be a nice target for the current trade setup when entering a short setup. Okay. Not to forget, watch the economic calendars and the political calendars, where they are going to be talking about the Brexit negotiation stuff and Brexit outcomes and discussions in the British Parliament. Mrs. May is going to be reporting next week. I guess it was Tuesday. So better check out all these kind of time levels for you when you are in a trade like this, because the Euro GBP or every kind of a cable pair is very, very hot. It's becoming very, very hot in the next days, and especially until the 29th of March, when the official, Brexit date is taking place. Okay, DAX, we spoke about DAX, we spoke about the SPX, we spoke about the Euro GBP, US dollar was the Chinese one, the loonie. Okay, now Euro US dollar. Needless to say that we are still hovering around, really sidelining, and these old Fibonacci analysis is almost the same. All you can do is really moving this kind of a low to the next step. And of course, moving some kind of target zones. Right now, scratching directly at this 38.2 levels to be taking place into the upside is still a target for the bulls. Is still the 114 level, very close to that. You got to be checking out, let's say, a so-called open interest, or let's say the so-called options, where Euro US dollar has been traded, where some so-called barriers are going to be checked. And needless to say that we got barriers, and the expiry dates mostly are at the New York trading time. So interesting levels. Always something like the 113.98 level, very close to that 114 I spoke about right now. So that 61.8 is from the chart technical aspect, from the Fibonacci analysis. It's very interesting. From the option expiries, might be interesting in direction to 113.98, just to be into this direction to be scratched for the upside. Might be interesting, or a little bit of a direction to that side. And of course, we need to talk about the downside level here as well, just from the fundamentals. Everything you don't see in a chart, every kind of a move you really can't explain with a chart technical aspect. You got to ask yourself, what is the fundamentals? What is the fundamental reason? Is there something like a story around? Well, and something is weakening. A little bit of weakening the euro, because the so-called ECB minutes, which is the protocol from the ECB, last ECB session, spoke about TLTROs. So that's so-called targeted long-term refinancing operations. And the current ones are going to be ending soon. The next targeted long-term refinancing operations are not yet in place, but they already spoke about that. So that means that means 10 years after the financial crisis, the Eurozone still needs refinancing operations, still needs tenders from the ECB to maintain liquidity issues, to solve crisis issues, and to solve situations, for example, with Italian banks, for example, with Spanish banks, and possibly even solving problems with future problems with German banks. You never know. However, it's something like chasing the weaker part of that currency pair, and the next days and weeks it might be interesting to look into the direction US, because the USA is still loaded with debt, billions and billions of dollars of debt, and it's gonna be solved because the debt ceiling issue is coming closer. And the crazy thing is it is coming closer, and all the stuff in March is coming together. Brexit, debt issues in the US with the debt ceiling, and of course election panics, election talks and politics stuff in the European Union, where the European Union is not talking with one voice. So that's the issue. What I'm gonna say is that every spike in the euro-US dollar in direction to this 114 is an invitation of the Forex market to go short again. That's all I'm saying right now. All right. Second interesting market, we're gonna delete this stuff here from the old chart. I'm gonna just delete these two lines here as well. Whoops, delete. And just have a look at the current setback of the Aussie. Why did it happen? Why did it happen? Well, there's a lot of stories around. One of the stories was the poor labor data. So the poor Australian labor data was an issue. But on top of that, another story right now is drawn from the Chinese Australian coal story. It has to do something with the port in China, and they simply talked about 12 million tons. I'm not sure, is it 12 million tons? Going to be correcting me if I'm not right. So that's the top of it, and they won't be importing more. So that would lead to a little bit of a pressure of the Aussie. So needless to say that the Australians are moving really loads of coal into direction China, but of course it is not the whole Australian economy. So that might be a little bit overdrawn, that kind of a picture. What we are now doing is we are just simply inserting those last lows into this last highs here, like those typical Fibonacci analysis, doing that at the 4-hour, and looking right now to check out a couple of trade situations, because that 61.8 level right here is maybe a trigger to the downside here. So that possibly is interesting to try to get a short setup in direction to the last low, which we see here, which is at 0.7050s. And if you look back in the chart technical history here, all you can see and all you can find is that huge dump. I would say really dump. Sorry to use that word, but if you look at that candle, that simply was the so-called flash crash here, which led to 0.6757. You don't expect something like this, please. But what you can expect is that you have a little bit of a setback in direction to the 0.69ers again. So that would correspond with so-called projections to the downside, which you can see at 138.2 and 161.8 levels. All right. So I spoke a lot about those couple of trade ideas, trade issues. Maybe there's a question to another market. Alex, not sure. Otherwise, time is our limit. We always say it's 11:26 already.
Yes, there is a question from Mr. Darshan Patel. Could you say something about the sterling?
Sterling. I spoke about Euro GBP. That's my sterling story today.
Okay, yeah.
In brackets.
And the other question is about the German Bund. Can you say something about that?
Just check it out if we have that German Bund still here on. No, let's check if I have an open chart here. Yeah, here we go. Okay, I'm just widening that picture. Well, first of all, maybe a not too bad question, because right now, if we are really looking in direction to short the market, the stock market, that might lead to the conclusion that maybe other participants are looking for, let's say, more secure levels and more another reasons to park money somewhere. And often that kind of so-called a big parking lot with big wide open doors is the German Bund. And if you check the current levels, almost the next, let's say even the 9-year runners are right now in negative yield territory. So these the 9-year runners are minus 0.05%, and that 10-year runner is hovering at 0.11 or 0.11. Let's say that typical American way of talking about that kind of numbers. That would be into direction to the upside, not the trade idea that we had the last time, where we tried to short that last high here. So the other way around would be, if you check out the wider picture, that we really run up to the last highs we've seen here so far. So that would be in direction to 167.50s, and that definitely would lead into negative yields for the 10-year bonds. We will be checking that one stuff, of course, at the short term. Let's just widen the picture here and just have a look at the current highs and lows from the 4-hour chart. And let's just check out if that one is the last low, 165.83, 165.84, yeah. And if you can see that 61, gotta check that out if that is correct right now. You see that 61.8 level right here, which is really close to that 166.40s here, which you spoke about last week. We might be having the next possible targets to 166.80s here as well, to reopen another push up to the upside. So 166.80s might be a trigger to that scenario. Nevertheless, if you check out the current stock markets, and if we have something like a bigger move to the downside, it will definitely be able to push up the Bund. So because it's just a safe haven play in Europe, that's the issue. That is all I can say from a 1 minute or 2 minute look at this kind of situation. All right.
Great. Thank you very much. Would you like to say goodbye, or?
Yes. It's 11. My gosh, it's 11:30. Time is running. Absolutely one thing, very important. If you check out the current markets, and if you think about to go short in the German DAX, for example, or in the SP500, really be patient. Be patient. Don't hesitate. Don't really sit on your keyboard and really press buttons because you have to be short somewhere. Be patient and simply wait until the market is really, let's say, having a 1 hour or 4 hour spike, and trade that kind of spike to the short side. It's really like a pain in the ass if you are too fast. Don't be too fast. Nobody forces you to do that. You're a trader by yourself. You trade your own money, and nobody is managing you and tells you somewhere behind you and tells you got to be trading right now. So that's the most important issue, because all the mistakes, all the so-called mistrades happen because we rush into a trade. That's all I wanted to say. Okay. Happy weekend. Hopefully you will be having a sunny weekend. Doesn't look right now here, but possibly it will happen in the next hours. You never know.
In Berlin, it's quite sunny at the moment, actually.
I wish I would be in Berlin right now.
Okay, great.
This is a cloudy mess up here.
Really? No,
Yes.
It looks as if the weekend is going to be very, very, enjoyable, let's call it.
That's very perfect. Alex, you got to be optimistic. That's the one and only thing. I know.
That's true. Okay, guys. Thank you very much for your comprehensive analysis, Dirk. Thanks to the audience for listening. I'm very sure you did enjoy this webinar. If you would like to review it, you can do so anytime. Just visit our channel on YouTube. I wish all of you a happy weekend. Have a good day ahead. Bye-bye. Bye, Dirk.
Bye-bye. Bye.